My base case outlook, Michelle, is very bullish for gold. You know I don't give price targets, but let me just throw out there, a mere 10% gain from where we are now is over 2,200. And that would make for some pretty exciting headlines. That would be easy to hit. So interesting times. I'm extremely bullish on this, and I am placing more and larger bets than I have in the past on gold stocks that I think are still on sale right now.
Lobo Tiggre, the editor of the Independent Speculator, presents an optimistic outlook for gold, describing it as a potential game changer. Tiggre suggests the possibility of a 10% gain from the current level, envisioning a scenario where gold surpasses $2,200. This positive sentiment aligns with historical trends, as the World Gold Council's analysis indicates, highlighting gold's strong performance in January, boasting an average return of 1.79% since 1971, nearly 3 times its long-term monthly average. Tiggre expresses confidence in predicting a gold boom in 2024, citing various potential catalysts such as a fear factor leading to safe haven demand, a soft landing, or a reflationary boom. The gold market closed 2023 above the psychological $2,000 level, slightly below its all-time high, marking a bullish development. Tiggre emphasizes that gold starts from a higher base, $2,000, making the precious metal more favorable. Examining historical data, gold has shown positive returns in January almost 60% of the time since 1971, increasing to 70% when considering the period from 2000. A significant factor contributing to this positive outlook is the Federal Reserve's decision to put rate hikes on hold, with expectations leaning towards rate cuts in the coming year. This shift is anticipated to weaken the dollar significantly, eliminating a significant headwind for gold throughout 2023. Tiggre also highlights critical supporting factors for gold, including the continued central bank buying, the gradual process of dollarization, and the influence of Eastern buyers. The recent surge in gold prices since October is attributed to a combination of factors, including a decline in bond yields, expectations of a more accessible monetary policy environment, geopolitical tensions, and weakness in the US dollar, all contributing to increased investor appetite for gold. Let's delve into key moments from Lobo Tiggre's interview with these video clips.
We had this conversation through the theories and the whys and wherefores first. And it's particularly important that we talked about the uranium thing first, because if the headline here is gold bug is bullish on gold, then that's not very exciting. I think it matters that last year I was willing to say that it was the other yellow metal that was my highest conviction trade. So I'm not, a broken clock that just happens to be right sometimes. If I'm saying that my highest conviction trade for 2024 is gold, and here are the reasons why, then I hope maybe you'll listen to me a little bit more than somebody who's always bullish on gold every year, no matter what happens. That having been said, Michelle, I got to say, you're very kind to give an old wolf credit where due. The reasons for my call on an all-time nominal high, not a real high, a nominal high in gold, was the recession that was that undeniable recession that didn't happen, or at least not undeniably didn't happen. If you're in the camp that Lobo got it wrong, there was no undeniable recession, then my reasons for making that call were wrong, and the call is really an accident, so you shouldn't give me credit for it. Is that I was right, but it was masked or hidden or whatever. It was quasi-deniable. Well, then that gives more credence to my views going forward. So I'll leave that to the audience to decide which camp you're in. But I will tell you, Michelle, that I felt extraordinarily confident about that call in the last year for uranium in 2023. Absent a major nuclear incident, it was almost not even if when, it just had to happen. Mm-hmm. And I'm not quite going to say, it has to happen with gold that way, but it certainly looks like that. I mean, in my view, if we get the hard landing, that fear factor creates safe haven demand, gold goes up. If I'm wrong about that, we get the soft landing, it's still recessionary, that still is bullish for gold. And if there's no landing, we just go into a reflationary boom, that's bullish for commodities, all the money flows, and that's bullish for all commodities, including gold and silver. So I'm not saying there's no way for gold to go down, but all of the major potential paths in front of us, they all look to me bullish for gold. And we're not starting from a $1,300 base or an $800 base or a $200 base. We're starting with a $2,000 base going into this scenario. I think one of the reasons why gold did so well in 2023 that I left out of my scenario was the central bank buying. I didn't think it would be as persistent and as great as it was in 2023. But that's not going away. De-dollarization is something that will take a long time to play out. It's, in my view, it makes great headlines, but it's not really an investable trend right now, except in the case that we're seeing, in terms of what's happening now, we're seeing BRICS and beyond, the global south or the Eastern buyers are there in force. So that, to my mind, puts a nice floor under gold. And then you have all the macro that we've talked about arguing for higher gold prices from a much higher base. So yes, I feel very strongly about this. And that's why my shopping list right now, it's primarily gold, a little bit of silver lining in there.
In assessing the performance of gold stocks, LoboTiggre offers valuable insights, suggesting that a stock's reaction to gold reaching a new nominal all-time high is a crucial indicator of its investment potential. According to Tiggre, stocks that did not respond to this milestone may not be wise investment choices. Conversely, those stocks that positively reacted to the recent gold rally signal the potential for movement, particularly if gold continues its predicted upward trajectory in 2024. Drawing a parallel to the broader market, Tiggre's observations align with the potential impact of the U.S. stock market's substantial gains in 2023. With the S&P 500 concluding the year with a remarkable 24% annual gain and nearing its first record closing high in approximately 2 years, historical trends suggest a positive influence on equities in the upcoming year. In a reflective tone, Tiggre acknowledges the importance of learning from mistakes and recognizes the possibility of accurately predicting high gold prices in 2023 for reasons that may not have been entirely accurate. Let's get back to the interview.
If I was risk averse, then the major players, the profitable major players, are go-to stocks that are close to no-brainers. And you can tell the caveat there, I'm not going to give you a name, but anybody, you know the top 5, look at the ones that are on sale and are making money. I mean, not all of them are on sale anymore, so I wouldn't just buy them all. In terms of the farther down the food chain, due diligence matters. Hopefully, people will consider hiring me to help with that. But even if not, I give you a practical guide. If you're looking at something that's still on sale and you're saying, okay, I'm bullish on gold and I want to buy something that's still on sale. Lobo says stocks are still relatively cheap, certainly priced in gold. They're very cheap. Okay, but which one? If you see something that looks good to you and that price didn't even wiggle when gold hit a new nominal all-time high, that's a red flag. Probably not a stock you want to buy. Whereas, okay, maybe it didn't hit a new all-time high either, but it responded to the recent rally in gold, then that tells you that stock will move if we're right about where gold is going in 2024. So that can help you build your shopping list. Well, I have been thinking about this because, of course, you make some mistakes and you try to learn from them. If I was right about the high gold price in 2023, but for the wrong reason, I really need to think about that. And I have come up with something. I was watching Ed Yardeni on, I think it was a Bloomberg interview, another one of these longtime legendary investors. He's a bull, and he's got lots of reasons for being a bull, but he said one thing in particular that really made me sit back and think. And he said that the baby boom generation is getting to the age where they're flipping from saving to spending. I don't know where he got the data for this or if it's just an idea he has, but it makes perfect sense to me. Anecdotally, I speak with people in an age group, and I see absolutely what he's talking about. And that is a huge pile of money, Michelle. We're talking trillions and trillions of dollars. And if those people reverse course, that is a big enough macroeconomic shift. Like if I ask, how could it possibly be that all these bad things can happen, the COVID lockdown shocks to the economy, how can we not have a recession? Well, those trillions of dollars coming into the market, like we should have a recession, but if we don't have it, maybe something like that could be there. So this isn't a prediction. I'm not saying, therefore, change everything. But if you ask me, how might I be wrong? What could change things? Or put it another way, we like to laugh at people who say, oh, this time is different. You can ignore the leading economic indicators because this time is different. Or you can, ignore this because it's different. Well, if Ed is right about the baby boomers flipping from saving to spending, that is a big enough change in the economy that this time could be different. I don't know if he's right. I don't know what will happen, but it's something I'll be watching for. My knee-jerk reaction is probably bearish for gold, but it'd be terrific for the oil stocks that I do have in my portfolio. My few proud copper survivors would do well. And by the way, it could be spectacularly good news for silver. Like we're always, we're always waiting for silver to come and outperform gold. Silver could actually be a much better bet than gold in that environment.
Gold has rallied since the Fed effectively surrendered to inflation, despite Fed officials trying to walk back rate cut expectations. Gold hit a low of $1,980 per ounce on December 12th. From that point, the price climbed to $2,080 on December 27th. If historical trends hold, we may see a continuing rally through the first month of 2024. In light of Tigre's insights into the performance of gold from late 2023 to early 2024, do you see any specific challenges or opportunities that may arise for gold investors in the coming months? Share your thoughts in the comment section. If you liked the video, please subscribe to our channel and remember to activate notifications by hitting the bell icon. Your participation means a lot to us. Thank you.